All right, so this week I'm going to do a mix of macro and connect it to the things that we're invested in Profits Unlimited and across our services. So when I look at what MSM, the media, financial media, is focused on today, I think they're focused on 100% the wrong things. Because if you read, pick your publication, MarketWatch, Yahoo Finance, Wall Street Journal, New York Times, and they are 100% focused on the wrong things. Inflation, some people talk about hyperinflation, some people talk about a housing bubble, they talk about interest rates are going to skyrocket, then there's China, and they just generally are gloomy, doomy, pessimistic, and just are filled with fear and bearishness and pessimism. And when I look at the world, when we look at the world, what we really see is innovation, change, growth, and massive, humongous opportunity. And so today I just want to focus on two actual problems that you should be actually worrying about versus the junk and the crap that is being spewed at you, largely to make you click, to make you panic and fear. And where by focusing on that, you're actually missing out on a genuine, real risk that is going on in our economy today and in our markets today that in all likelihood, many of you are invested in some way, shape, or form. So here's a genuine problem that is out there. And then I'll talk about actual opportunities. So a genuine problem that has been ongoing for a while is this, which is that you've got a lot of people who have been frustrated by very low bond yields in the bond market, in savings accounts at banks that have piled into stocks that pay dividends and that have piled into stocks that claim to be, I'm doing the air quotes here, safe. And this is a bubble. This is a massive, enormous bubble that is ultimately going to come back and absolutely hurt people. And the kinds of stocks are the things that people think that are so stable that, like, look, it doesn't matter if there was another Great Depression, people would still come to buy, and they'll talk about some category like soup or toilet paper or something like that. And this kind of false kind of reasoning allows people to be in these stocks when these, in our judgment, are actually quite dangerous stocks. And here's why. These stocks and the companies underpinning these stocks have for a very long time been borrowing money in the bond market at crazy low yields. In other words, at very low interest rates. And then they've been recycling this money into two things. One, into paying rising dividends that are unsupported by their businesses. A healthy business provides their dividends out of their operating cash flow. So you can see where their sales are rising, their profits are also rising, and they're paying out dividends from that. Unhealthy companies pay it out from all kinds of different places, including from borrowing money from the bond market and then paying it out. The second thing that they've been doing that is incredibly destructive and that is keeping people in these stocks, they've also been taking money from the bond market often from, instead of reinvesting in new growth, new opportunities in innovation, they've been taking that money and they've been buying back massive, extraordinary amounts of stock. And the greatest example of this is a company that is probably the most widely owned company in the world today, and that's Apple. On average, year after year, Apple has been buying somewhere in the range of 65, 70 billion, $75 billion. That's right, $75 billion worth of stock per year, even as its stock has been rising. And people have been riding along with Apple, believing that this is a good thing. However, from the perspective of capital markets, if somebody is buying something at a very high price, generally speaking, you want to be a seller, not a buyer. So I'll just say that. So you've got these two behaviors that are now really deeply entrenched among America 1.0 companies, non-innovation companies, that really are just focused on their stock price and keeping people in there either through an inflated dividend that is unsupported by their business, and then that is being supported by borrowing that I believe ultimately is going to be a huge problem, because we are going to have a white swan event. I talked about this yesterday with Amber on Market Talk. In other words, people are completely and utterly underestimating the power of the technologies that we are invested in across our franchise, which is the Internet of Things, artificial intelligence, blockchain, or if you're looking at technologies, 3D printing, precision medicine. And these are all deflationary technologies, folks. In other words, they make the old technology obsolete, and they make it obsolete by making it more convenient, more accessible, cheaper, and something that you will use more often as a result of all of these things. And the end result of that is that it ends up bankrupting the old technologies, the old products, the old services. So these companies that have been doing this borrowing and pushing out dividends that are unsupported by their businesses, buying back stock to keep their prices at very high levels, to keep people in there, in my opinion, it's a ticking clock. In other words, their day of reckoning is coming, and it is going to get ugly. Meanwhile, for our stocks, they are companies that are seeing massive growth, are implementing incredible, humongous innovation, and they represent change that is obviously unwelcome by the incumbents. However, if you're looking for a better life, you're looking for something better, they represent change, and I believe that change is good. People can come and argue with me, that's fine. Everyone is entitled to have their particular point of view. And most importantly for us as investors, as speculators, as traders, it represents humongous, massive, phenomenal opportunity. And we call that opportunity America 2.0 and the fourth industrial revolution. And here's two examples of why this is happening right now. Because if you go and look at our companies, while over the last 6 or 7 months, their stock prices are not reflecting this, they are still seeing massive growth. Without exception, every single company at minimum is seeing 15 to 20% sales growth. And that's the growth that matters, because if you are unable to increase your sales, it doesn't matter what happens below it. In other words, without sales, you don't have a dollar coming in to turn into profit. So sales is the thing that you want to focus on if you're looking at growth. And the other thing that you're seeing is adoption. If I just look at this platform that I'm using to make this video, Zoom, literally a year ago, they had a few million people on. Today, they have the entire world on. It has become what I would call a telepresence platform. And in other words, it's a way how we as now people worldwide sort of project ourselves through video using the internet to other places. I show up through Zoom. We're recording this video and putting up on YouTube. However, I could, if I wanted to, have hundreds of people, if not thousands of people, just have a Zoom audience and do this live if I wanted to. And this capability existed last year. However, today, with the pandemic, with the extraordinary, incredible changes in life that it has brought on, you are seeing massive adoption of things like Zoom. Or if you look at the vaccines that have now been widely adopted, widely distributed worldwide, mRNA technology has gone from nowhere to suddenly where everyone has a vaccine available in their country, at least in most countries, that uses this technology. And this represents, in my judgment, a massive, extraordinary, huge opportunity, which is why I am very, very, very bullish, very optimistic, very positive, because these companies are tiny. Apple is this $2.2 trillion behemoth, and you've got other large companies like it. Meanwhile, these companies are small, they are growing fast, they are seeing rising adoption, and their stock market capitalizations are really low. In other words, as people come to buy their stocks, they are going to bid it up. And the vast majority of the big money is not in these stocks. So they are going to come in first in small amounts because you know what? They can't buy in big amounts. These companies are too small. They're going to have to come and bid it up, which means, in my judgment, in my opinion, years, that's right, years of gains that are going to come through where people will just look at these stocks and say, it can't go on, and it will. And people will, as a result, be left out. So all the folks that want to time and jump in and out, they're going to get left out because it'll seem like there's never an actual perfect moment to get back in. And so I would tell you that if you're in our stocks, good times are coming. Our time is coming. I am very, very, very bullish, very optimistic, and very positive what I believe is going to unfold. And I believe that what you saw at the end of 2020 and early 2021, when these stocks just skyrocketed, that was a preview really of the big money trying to get in and then realizing that they were bidding these stocks up huge and then pulling back. I believe what you've seen now is this massive correction where market makers and others now have accumulated the stock where they can now run a sustainable markup. In other words, where prices can keep being marked up as the big money first puts 10 basis points in, then 20 basis points, then 30, then 50, then 1%, then 2%. And that is music to our ears, because that means our stocks are setting up to go up big and go to the moon. All right, that's the update for this week. I'll have another one for you next week. Until then, this is Paul saying bye.